Okay, hello everybody. Welcome to Korean Atlanta Mentorship. And in this video, I want to talk about how a 30-year loan or a 30-year mortgage isn't really a 30-year loan, right? And this is just more about food for thought. So I'm going to go over conceptual things. I'm not going to really go over um, detailed numbers, but this is just more for like food for thought. So ideally, when you buy a home, people have this dream that they're going to stay in it for the rest of their lives. That's why, a mortgage is 30 years because that's pretty much a lifetime. Now, for the typical person, that 30 years doesn't become 30 years, right? If you're a person who buys a home with a 30-year loan and you actually pay it off in 30 years, because the bar is so low, you're going to be ahead of most other homeowners with a mortgage. Because what happens? Well, this is what I learned that statistically every 5 to 7 years, and I honestly couldn't find those statistics. I think someone told me that, so I'm just kind of repeating someone else's words. The average American either refinances or sells their home and buys a new one, right? So let's say you're in year seven of your home and making payments. Then what happens? You sell your home and then you get another 30-year loan, right? You sell your home, or maybe you stay in their new home and you get a letter from the bank. Hey, you get a lower payment. Then you refinance. So refinance, all that means is just restarting another 30-year loan, right? So this 30-year loan can potentially be an infinite loan, like that will last forever until you die, because you're either selling or you're refinancing, right? And so the average person doesn't plan to stay in a home. Maybe in their fantasy mind they do, because that's, but fantasy is in reality. And so what will probably happen is that they're gonna sell in 5 to 7 years and just keep getting new loans or refinancing, right? And let me take a look at this article right here. And I've covered this article before, but over 80% of millennial first-time homeowners have buying regrets. And if and if you regret buying a home, would you want to really stay in it for 30 years? Probably not, right? Probably not. So it's very likely that you're not going to stay in the home for 30 years. And then again, even though this isn't technically correct, because once you refinance or get a new loan, the old loan gets paid off. It's still as if you're restarting that loan at the point where you refinance or sold. So let me just kind of tell you some personal anecdotes. So I live in a relatively new subdivision, about two years old, right? And I noticed after 1 year, I saw two homes with for sale signs. And I think that's insane. If you ever buy a home and sell it like within a year and you're not doing some sort of fix and flip, it's very likely that you're going to be in a losing position. So if we take a look here, right, so where it says amortized schedule breakdown, shout out to Bankrate for having this great amortization schedule calculator. You put in the loan amount here, 240,000. So let's assume that you have a 20% down payment and 80% loan for 30 years at a 6% interest rate. If you look at the schedule here, and let's say you bought a home, paid the monthly payments for a year, look how much interest goes to the bank. So this is the bank's essentially the profit, and this is the principal, which is the amount of the payment that actually went to the loan. So you don't know how it works. I'll break it down in another video. But if you take a look at the remaining balance, that remaining balance, even though you paid about a little bit more than 15,000, it only went down about $2,700. So, um, you know, I don't have any words for that other than, it's kind of a losing proposition, because you didn't really make any payments, you know, uh, how should I say this? Um, you filled in the bank's profits, especially or the bank's pocketbooks, especially in the first couple of years. Look at how much you pay. And so, if you tend to stay in the home more than 10 years, I think you'll be okay. But it's probably in your best interest to stay the entire 30. And you take a comparison. So by the time that the loan ends, and take a look at this, you paid 240,000 to the loan, and then you paid even more in interest. So if you weren't aware of that, there is that dynamic with it, with the 30-year mortgage at a 6% interest rate. So anyway, back to my point. If you sell your home with the mortgage within a year, you're probably going to be in a losing position, because not only did you just pay mostly all interest, but you have to pay a realtor commission, you have to pay closing costs. So realtor commission is 6% and closing costs is about 3%. So it's like, no, I wouldn't ever do that unless I'm insane. But maybe these people, for some reason, found something really awesome or a great deal on a home after 1 year, which I totally doubt. But my point is that even after a year, right? Even if after a year, people are going to sell their homes and then just restart a new one if they buy a new one. So another anecdote is that when I first started learning about real estate, I was so excited about learning about velocity banking. And if you don't know, velocity banking is like how to pay off your debts quickly. It's a really easy strategy, and I have videos on that. And I'll put on the detail section or link to that video in the detail section below. But basically, at that time I didn't own a home, I was just curious how other people, if it would benefit other people to learn that strategy. And so there's a lot of software subscription services out there that show the financial data on a home. So if you have a loan on a home or a mortgage, that data is public. And there are software companies that pay tons of money to be able to get that information from the county recorder's office. So that loan gets recorded in the county recorder's office. It's public data. If you're a realtor, you have access to the MLS, you can find that information too. And I was using a software subscription service to look up addresses of childhood friends or people that I knew. And it turns out most of them have never paid their home, right? They're not even anywhere close. So let's say in 1990, they bought the home for $300,000 because that's how much homes were worth back then in Southern California. 30 years later, or 20 something years later, they still owe 300,000. Or something I've seen is they bought a home for 600,000 or 400,000 or whatever, right? But it's a really nice area. 20 something years later, they own $1 million on the home. And so it's like, wow, like, if they learned this velocity banking strategy, they could have probably paid off their home in a short amount of time, and they wouldn't pay all that interest for many, 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 many years. And especially if your loan balance has grown from, the day that you bought the home to now, you probably refinanced and pulled out cash equity. If you don't know what that means, we'll probably go over that in another video. But the idea is that, it should have taken you 30 years to pay off their home, but 30 years later, you still have the exact same loan balance that it's like you never got even close to the finish line. You're at the starting line 30 years later, right? So just be aware, very common to not pay off that loan. Another thing that I thought was interesting food for thought is that I don't know if you're aware how a home value or estimated home value is determined, but if you ever talk to a real estate agent, and you mentioned the word comps or comparables, that's how they determine what they think the home can sell for. So what they do is they look about 6 to 12 months back for homes that are very similar to yours in the very same area or very close. And then they determine what they can sell your home for. So for example, let's say the home across the street, that's the exact same model, sold for $300,000 last week. That's probably what they'll estimate your home value is. Now think about this. If nobody sold their home and everybody stayed in the property for at least 30 years, it's very unlikely that you would even have a good set of sales comparables, or most of them would be outdated if people actually lived in their home for the entirety of the 30 years, right? The way that I think about it, and so the way that I think about it is that people love their neighborhood so much that they never move, right? And that's how you could think about buying and selling homes. If the only way that you know how much your home worth is if there's a lot of sales activity or substantial sales activity in that area, or else if people actually stayed in that home, you wouldn't have a good set of sales comparables to compare it to. And if you don't have any sales comparables, my guess is that people look at other neighborhoods that are similar to yours, but maybe even further, or maybe they just set the sales comparables if it's a very new area, like a new construction homes are built. But anyways, I'm just saying that sales comparables wouldn't be there if people actually stayed in their home for 30 years. At least I think they wouldn't. Anyways, okay, so it's just some food for thought about how nobody pays off their mortgage. That 30-year becomes an infinite loan and just stays with you probably till when you die for most people. And after they do that, then the kids have to sell the loan and or not sell the loan, sell the house, or just keep making payments on the loan, right? So the wealth is kind of illusion. Now, here's the thing. If you want to learn how to pay off that mortgage quickly within probably 5 to 7 years. I'm not going to say, but it depends on your financial situation. I'm going to put two links down below, Velocity Banking 101 and 102. So watch 101 first and then watch 102 first, and then you'll easily figure out how to pay off that loan quickly. And also, if you're interested in joining our mentorship group, go ahead and click the Google form link below in the details page, or go ahead and email us in the About section of the YouTube channel and just let us know you're interested in joining, and we'll set up a time for a Zoom call and we'll see if you're a good fit. All right. Have a great day, everybody, and we'll speak next time.